Hey traders, Cousin Vinny coming to you from theclosingprint.com on April the 19th, 2015. In this video, we're going to cover tick and tick Q for the NYSE and comp, respectively. Both appear to be ready to cross to the downside. Trend was very elevated, as was VIX on Friday. We had a nice little rally towards the end of the day. Breadth, we saw New York Stock Exchange Composite up-down volume was favored by the bears with upwards of 6-to-1 down versus up volume on Friday. That dissipated down to around 4.5, 4.6 to 1. And of course, bonds, we are testing a trend line that we've been watching for getting back into bonds. We have done that this past week. This is a chart of the S&P 500. Note the large volume by price bar where prices bounced on Friday. Now note the bounce was towards the end of the day in the last hour. But what I'd like to point out is, one, we've lost the 10-period EMA. And in previous occasions where we've lost the 10 EMA, like we saw here in March, again in January, also in the beginning of January, in December, the first week, and so on. When we lost the 10 EMA and the 20 EMA, we stayed down below the 10 EMA for more than one day. So we have yet to cross the downside through the 20, but price is below the 10 EMA. So this isn't saying that we have to stay below the 10 EMA, but it's an observation that when we have in the past, we dropped below the 10 EMA, then it crossed down through the 20, we saw several more days downside. Now, if you look at this indicator down below, this is a ratio of SH to SPX. When this narrows, it's typically an indication at extremes that a bottom is in and we can buy. And conversely, when we are very narrow, like we are here, and these two start to expand, we can anticipate further downside. So you can see what happened here when prices expanded and widened. Prices turned down and moved lower below the 10 EMA, and then we lost the 50 ultimately. Also note that we were in the caution zone and continue to move lower on the S&P 500. Another look at the same chart, we can see prices bouncing in the pretty much the same level. We have the 50 and a 200 period displayed here, but what I want you to notice is the NIAD. This is a moving average of the signal line, 5-day. Note the divergence that we saw in February where prices continue to move higher, but yet the moving average of the signal line on the advanced decline continued to move lower. And once it crossed the zero line, you can see here is when we started to sell. Well, we crossed over last week, and of course we sold on Friday. So keep in mind that we could continue to move lower here down through the zero line and find a point of inflection at some point down here between minus 700 and minus 800 on the S&P 500. Here is the NASDAQ composite. We are down below this volume by price bar. We talked about this last week, that we could see this reverse Kirby play out and prices drop further. We did test the 50-period moving average and moved higher towards the end of the day. Note Slow though was in the caution zone, continues to move lower, as we see here. And MACD is showing a cross on the 1226. In addition, the number of stocks trading above its 50-period moving average is down at 41%, continues to move lower. If we get down here below 20, 25, this would show an area hopefully aligning with this level down here as a very good level to go long into the end of the year on some of your long-term funds. Not saying we have to roll over and lose the NASDAQ composite, but I'll show you some other charts that'll point to the possibility of why it might happen. The top 25, 30 stocks by weight in both the comp and the S&P 500. And of course here is a chart of the Russell 2000. We noted the harami. Whenever you see a harami at highs inside of a large candle like this, expect a bit of weakness in the days ahead, which is exactly what we saw on Friday. So we knew ahead of time that we should pay attention and use caution going into Friday. Slow Stow is moving off of the caution zone. Still has a ways to go, so that's one of the other things we're concerned about. And MACD is headed lower. The S&P 500 small cap index, which we see here, came down and tested the 50-period moving average, and of course we have Slow Stow moving lower away from the caution zone, and MACD is moving lower as well. Note some levels here, volume by price, and extension of this trend line that goes back a couple of years down to this 710, 708 level. One of the things I wanted to point out is the small cap high-low percent. We have a sell signal. Note the histogram is down below zero here, and previous occurrences that line up with first week of March and last week of January on the small caps. First week of March, last week of January. Whenever we move down below that histogram, that's something to pay attention to. If we look at that on the mid-cap index, high-low percent you can see is at 0.25. We want to keep an eye on that going into the week. Looking at the mid-cap daily chart, we came down and tested the 50 there as well, lost to 20. And note Slow Stow is moving off the caution zone and moving lower, as well as MACD. And of course the Dow Industrials, we lost the 10 period and the 20, as well as the 50 period moving average, and we have a lower Bollinger Band here down at around 17,620, somewhere around there. Note the above average volume and Slow Stow moving off of the caution zone. MACD is turning as well. Histogram will likely go down below zero. So another reason why we're thinking that we could see more weakness in the week ahead. Note the rate of change oscillator is starting to flatten out a little bit, so we'll keep an eye on that as well. Looking at the NYA, the New York Stock Exchange Composite, we broke above on Wednesday, Thursday, and then failed on Friday. Note the up-down volume favors the bears. We had almost 5 to 1. Early in the day we had 6 to 1, closing at 4.74 to 2.21. So we definitely favor the bears here, and something we want to keep an eye on going into the week. With the 50 period moving average just below price. The 200 is just below that. And here's another look at the New York Stock Exchange Composite. Disregard the dashed lines. These have moved. These were down here along this volume by price level. We have the 50 period moving average down below. We lost the 10 period EMA. We have this Kirby pocket that we could possibly drop into, which aligns with the 50 period, so we'll keep an eye on that. And of course the Slow Stow has been moving out of the caution zone. We could see a further downside to this, signaling that prices could be a bit weaker. And note the high-low indicator has peaked and is turning and moving lower. Here is tick cumulative for the New York Stock Exchange Composite. Note we're about to cross here. We could still bounce, but also note the elder stick. We closed just below the 20 period moving average on the S&P 500, and we have a lower Bollinger Band down here that we could visit for support right around the 2050 area. Note trend was elevated last week and moving higher. Intraday it was around 125, 130 most of the day, and NYMO has crossed down below zero. As we alluded to, tick Q for the NASDAQ Composite, the summation here, the cumulative is pointing towards a bear cross as well. Note the close below the 20-period moving average and the red elder stick. NAMO looks the same, as well as trend Q. That was elevated around 125. During the day, it closed at 1.17. Keep in mind that tick and tick Q are real-time sentiment indicators for buying and selling by institutions. When we get a bear cross like this is telling you that the summation of all of the tick data during the day adds up over several days and pushes this indicator lower down below its 10 EMA. That cross would tell us to sell stocks. And of course, breadth, NIMO, we had weakness Thursday translated into Friday, and then we saw a push lower. This was around minus 24 intraday. It came back a little bit because we had a little bit of a rally towards the end of the day. Note that the summation index, the NICE, is pointing to a possible cross this week to the downside. That would be confirmation that we need to sell stocks or go short. And of course, for the NASDAQ McClellan oscillator, we see the same thing. Thursday, Friday, we pushed down through the zero line and recovered a little bit towards the end of the day. And of course, the NASI summation index of NAMO values is giving us what looks like it's going to be a bear cross without making a new high here. Note NAAD, the NASDAQ advanced decline, is moving lower as well, crossed through the zero line. Here is the CPC, the CBOE options put call ratio. We hit a low here last week, signaling this possible top. We've run back up. We're starting to get in the area where we could see a little bit of bottoming action, but keep in mind this can get up here to nosebleed territory right around 1.275, 1.28 before we see a bottom. If we lose the 20 period on Monday, look for these lows down here around 10,834. So let's take a look at commodities. Copper, we talked about a week or so ago, looking at this move higher and then resistance, failing, coming back down to the 50 period moving average. Now we're starting to move higher. Note the narrowing Bollinger Bands. This is bullish for equities if this continues to move higher. Gasoline, unleaded, continues to move higher. Gold, still having trouble right around the 50 period moving average and this volume by price bar. Note slow stow is headed towards the caution zone. WTIC, crude, we noted this range that we broke above on Wednesday. Previous to that, we had a Kumo breakout. If we look at that, it was pretty clear once we broke above Kumo and tested this upper range, moved back but didn't move down to this lower range bar and found support at the Kumo that we would possibly break out. So we knew ahead of time we are in UWTI position there for trading the crude move. Note the volume by price bar here. This is only going back to January, but we see a nice level that we're starting to break above as well. So once we get above this level here, UWTI should continue to move higher at a faster pace. Now let's take a look at the Dow 30. I think this will be quite interesting for those of you that are leaning bullish. I like to look at both sides of the picture where we consider the bullish as well as the bearish caveats. AXP reported earnings last week, wasn't that well received, down below this volume by price bar. Note slow stow is moving off of caution zone. MACD is turning down as well. Boeing, same thing, dropping out. 10 EMA is moving lower, prices below all of the moving averages here except for the 200, which isn't displayed, and slow stow is in the buy zone. Note MACD is showing lower. Caterpillar, note slow stows in the caution zone, moving lower. We have this volume by price level to deal with, as well as being rejected at this previous support resistance level. And MACD looks like it's hesitating. Note the histogram. starting to move a little bit lower. Cisco, right at the 50-period moving average. Slow stow is in the caution zone, moving lower. We could see lower prices here. It's not a guarantee, it's just something we're observing. Volume by price levels here. We have this 20-period below and the lower Bollinger Band. If this picks up some momentum, continues to move lower. MACD continues to move higher. CVX, Chevron Corp, energy has been doing somewhat better of late. Note where prices are above the 10 EMA. Slow stow is overbought in the caution zone, and MACD looks like it's starting to flatten out. DuPont, DD, rejected at the 20 period below the 10 period EMA. This looks like a short going into the week. Note if we lose this level here, we have this reverse Kirby, and slow stow is moving lower as well. MACD's turning. Disney, not that great of a candle on Friday. We held at the 10 period EMA. Note the volume above average and slow stow pointing lower. MACD turning down as well. GE, everybody seems to think this is going higher. I don't know. Personally, it looks a little weak along with everything else. It held at 10 period EMA. It's above same. Bollinger Bands are very wide, so that could pull in a little bit. Slow stow continues to point lower, and MACD is peaking out here. Goldman Sachs, we were hoping that we would see better action on XLF. The big money center banks reporting last week. Note the volume by price level here is pretty substantial, so we would expect any pullback to the 20 period and this volume by price level to be bought. Slow stow is turning down from the caution zone, and MACD's peaked. Home Depot lost the 50 period moving average. I would expect to see Bollinger Bands start to open up. We have this horizontal range. Note slow stow and MACD both could turn back up and be supportive of a completion of this range, possibly moving higher. But right now we're at the below the 50 period and the 10. We could move back up and test the 50 period, and we'll watch for that on Monday. IBM, the volume by price levels here. Slow stow is continuing to move lower, and MACD is crossing to the downside. Intel, meandering here at the 50 period moving average of this large volume by price level to deal with. Slow stow is in the caution zone, and MACD looks like it's peaking out here. Note the histogram. Johnson & Johnson in the staples and defensive sector, as well as pharmaceuticals. Note these lows here. Volume by price is giving price a little bit of a problem here, but slow stow is oversold and could turn. Note MACD. JP Morgan, another money center bank. Note the volume last week came down and tested the 10 EMA. Got the volume by price levels here. Note slow stow is in the caution zone, moving lower now, and MACD is peaking out. Coca-Cola, not much here. Note the volume by price levels. Slow stow is below 20 and turning, and MACD looks like it's going to cross to the downside rather than turn back up. But we'll keep an eye on that this week. McDonald's, got these lows right here that we could lose. Note the volume by price level that would be supportive, but we do have slow stow oversold and could turn. Could also embed like we did back here and see lower prices. Possibly come down to the volume by price bar here. Who knows? MACD is pointing to lower prices as well. 3M got whipped on Friday, gap down, lower Bollinger Band. Note this pattern here. We'll redraw these trend lines. Possibly a test here and a bounce. Slow stows pointing to lower prices, and MACD's crossing. Merck, note the lower Bollinger Band, volume by price bar. If it drops lower, slow stow is pointing to the possibility that might happen. MACD is also. Microsoft moving lower, down below the 10 period EMA, holding right here above this volume by price bar. Slow stow continues to move lower. The reason I'm pointing these out is if you're bullish and you want to see the indices moving higher, you want all of these to be supportive of higher prices, which currently isn't the case in most of these. Nike 50 period moving average down below, volume by price level support. Slow stow is turning back down, and MACD is headed lower as well. Pfizer, PFE, prices look much stronger than Merck. Note we closed right at the 10 period EMA, tested the 20 period, we have this volume by price level. Slow is pointing lower though, and MACD could conceivably turn down as well. Procter & Gamble, PG. Note this looks weak, came up and tested the 50 period, was rejected. We have this volume by price bar. If we could drop down below that, with slow pointing to the possibility of lower prices, we could quickly see this level down here at 80.21, 80.30. So we'll watch for that as well. MACD is turning lower. AT&T, pretty weak here as well. Volume by price resistance. Note that we didn't break above this level as well as volume by price last week, with slow pointing lower and MACD turning down as well. Travelers Insurance, nasty candle on Friday, volume by price. If we drop down below that, we have this huge Kirby downside, which is why I'm concerned about the indices, in particular MACD and slow are both turning back down. UNH, healthcare providers, doing much better. We did have a red day on Friday as well as Wednesday. Slow is meandering around 50. Watch for this to turn back up and MACD to get back above its signal line. We want to see XLV and XBI, IBB, the biotechs and healthcare do well this week if you're bullish. If you're bearish, you want to see them weak. Note this triple bottom here on a shorter time frame. We could see lower prices here with slow pointing lower and MACD crossing. Visa at the lows, lower Bollinger Band, volume by price. Note this huge Kirby here. I don't think it's coming down that far, but it's just something to consider. Slow moving lower and MACD crossing to the downside. Horizon, cable and fiber. Note where prices are down below the 10 period EMA. We have the 20 period and we also have the 50 period below, with slow pointing to lower prices from the caution zone, moving down and MACD crossing. Walmart continues to get whipped inside of this Kirby. You can see how it's accelerating now. There's fewer buyers in this area, so there's fewer people and investors to hold this back to a move lower. If we get down here to the 76.42 level, I'd be a buyer on Walmart. Note where slow is right now, and MACD moving lower as well. XOM, ExxonMobil, again energy. We have this huge volume by price level, congestion to deal with. Slow is at the caution zone and moving lower, as well as MACD stalling. Note the histogram. Again, if you are bullish going into Monday, Tuesday, Wednesday trading, you want to consider where prices are relative to previous highs and lows. Now, we use an oscillator that compares two rate of change indicators to each other, a long and a short. And when the change occurs, we see these peaks and valleys. It's 14 and 10 periods. Now, last Wednesday we talked about the fact that this indicator was starting to flatten out and we were looking for downside on the SPY. Well, that's in fact exactly what we got on Friday. Now, this isn't saying this is the magic 8 ball. It's just something that we watch for when we're thinking about trades. We want to keep an eye on this oscillator and possibly look for shorts at resistance when the oscillator is starting to turn, which is why we took that SPY put position on the 207 week 4s and the 209 week 4s last week. It did quite well on Thursday, Friday. So I'm just going to run through some charts with the similar oscillator. Note the comp. It showed the same thing. It peaked on Wednesday and started turning lower. And what we want to do is keep an eye on the top weighted stocks in the indices. If we look at the S&P 500, here are the candidates in there: Apple, Exxon, Microsoft, so on and so forth. So you want to keep an eye on these stocks at support and resistance, at turning points. For example, we're thinking about continuing to stay bearish because a lot of these charts are peaking on this oscillator. That's the S&P 500, and this is the top weighted stocks. If we look at the NASDAQ 100, same thing. A lot of the same stocks: Apple, Microsoft, Google, Amazon, etc. With that mindset, if these stocks are peaking and crossing back down through the zero line, that's indicative of further weakness. Apple, you can see where we are. We're down below the 50-period moving average, and the indicator peaked is moving down through the zero line. Doesn't mean we can't turn back up like we saw here, but it's something to consider with everyone getting bullish on Friday going into Monday. Amazon, same thing. ADP processing. Bank of America, BIIB, note it's peaking here as well. Berkshire Hathaway down below the 200 period moving average. Oscillator continues to move lower. Celgene, same thing. Seeing a peak on Citibank. Comcast, Costco, this is on the NASDAQ, continues to move lower. It's near a point of inflection. CVX, DirecTV, Disney, turning down as well. eBay rejected at the zero line. ESRX moving lower. Note when it peaked. Facebook sitting on the 50-period moving average. There's no reason why this can't bounce back in the other direction like we saw here back in December, as well as when we were headed down in late summer. This quickly reversed and moved back to the upside. So that can happen, especially if it's like happening at previous resistance or support, and you might have a volume by price level or a 50-period or 20-period moving average or something like that in the picture. But this oscillator does work nonetheless. GE, Gilead, Google, turning down, turning lower as well. Johnson & Johnson, JP Morgan, moving off highs. Note the oscillators peaked and moving lower. Kraft, Microsoft, Mondelez, all of these. Merck. So you can see why I have a little trepidation when it comes to not getting too far ahead of myself as far as trading long or short without consulting those oscillators. Okay, so this is Cousin Vinny coming to you from theclosingprint.com. For you new traders, be sure to check out these top 5 or 6 videos, which will give you a better edge on understanding the markets, taking setups, and where to position yourself for the highest risk reward on your trade. In addition, if you don't subscribe to the blog, this is a spam-free site. Enter your email address in here and you can get these delivered to your email every day. You'll note my tweets are here, the watch list for the week or the day. You can just scroll down through these, keeping track of the trades that we're looking at, whether they're high type flags or Bollinger Band setups. It's also a place for me to document the trades and thoughts going into the weeks. So I hope this helps. Take care. We'll talk to you on the stream on Monday.